Have you seen the headlines? The markets feels like they're moving a little faster. Wait till you hear what's coming next, because today's stories rhyme. Policy shifting at the top, new payment rails forming, and a prediction market poking a giant's reputation. Educational only, not financial advice. Here's the context and why it matters. Reported today, the White House is weighing alternative candidates to chair the CFTC as Brian Quintenz's confirmation stalls, with crypto-savvy officials in the mix. The agency is operating with a skeleton crew, one commissioner acting as chair, while Congress works on expanding its digital asset mandate. Policy is a pipe. When the people at the valve change, the flow changes. For traders, a credible, crypto-literate leadership at the CFTC could mean clearer derivatives oversight, faster rulemaking, and fewer one-off jolts from procedural uncertainty. The survival frame is posture, not prediction. Assume policy headlines can become short, sharp catalysts, so tie your bias to structure. If your level is reclaimed on rising participation, you trade with tight invalidation and partials into nearby liquidity. If the retest fails, you step aside and let the next shell form. Process wins when politics gets loud. Now, as reported in Cointelegraph, Nubank, one of Latin America's largest digital banks, plans to integrate stablecoins into credit card transactions. Translation: programmable dollars meeting the largest consumer rails in the region. Bridges form and cash starts to move differently. This matters because payment corridors can change microstructure in ways you can feel at the keyboard. Fewer gaps around session closes, steadier spot demand in predictable windows, and cleaner fills where the rail actually plugs in. For investors and day traders, the move validates the tokenized cash in the wild thesis. The survival frame is simple and calm. Watch for evidence before action. Tighter spreads, smoother basis, and reclaims that hold on pairs exposed to those corridors. If real depth appears, consider leaning small with invalidation under the reclaimed line and a time stop to avoid slow bleed. If it's still a press release with no order book truth, preserve your energy. Liquidity over lore every time. And the reputational tremor you shouldn't ignore. As reported today, Polymarket is hosting wagers on whether Changpeng Zhao, Binance's founder, will receive a presidential pardon. Prediction markets aren't courts, but they do surface sentiment. This isn't about cheering or jeering. It's about acknowledging that regulatory overhang and founder headlines can shape venue preference and regional flows in short bursts. If odds swing and narrative heats up, you can see transient spreads, basis quirks, or shifts in volumes across Asia-US windows. The survival frame is risk hygiene. Don't let storylines widen your risk. Keep position size tied to realized volatility. If ranges expand, your position shrinks so your dollar risk stays constant. Maintain platform redundancy. Fund a backup venue before you need it. And if spread behavior turns odd during a narrative flare, skip that window and trade where depth stays honest. Thread these together and a picture emerges. Policy valves turning at the CFTC, stablecoin rails quietly connecting to mainstream payments, and a prediction market testing a mega brand's narrative gravity. If the market feels like it's tilting, you're not imagining it. The edge is to trade architecture, levels, liquidity, confirmation, not vibes. And subscribe to Crypto Lens for first updates. We'll keep reading the room together, then trading the level.